radio for a really great future. We're talking real money.
Hi there. I want to share a phone number with you because it's kind of an important phone number. That number is 855-935-8255. Those last four digits spell TALK if you like to spell things out or remember them that way. And we are here on Saturdays to talk about money. And we'd love to do it with you. Just give us a call, 855-935-TALK. I'm Don McDonald in Florida. Tom Cox by Lake Chelan.
Above
High
Lake Chelan.
in the hills above Lake Chelan.
Yeah. So
the hills are alive with the sound of Tom Cock.
Yeah. Well, let's not get carried away. I didn't hear anything last night. It was very quiet. So the stars are very visible. I will say that from up here.
We have discussed the bad advice that exists in so much of the financial media, and one of the whipping boys for us is Barron's. Barron's tends to be so short-term oriented in their opinions and direction, but they're going to new lows because they're allowing people who are selling stuff to write for them.
It's blatant advertorial.
But it's not even identified as such.
No, it is not. Nope, it is not. But the guy who wrote it manages a non-traditional bond fund that charges 1.23% a year.
And the article is, the basic premise of the article is that bonds don't work anymore.
Yeah, it's been, 5 years now. How long you got to wait?
This is
ridiculous.
Appalling.
It really is. It's just awful. And his solution is even worse. I mean, okay, with all fairness.
Yeah.
If you held BND for the last 5 years, you are underwater.
Yes.
The total bond.
Yes.
You are underwater. Okay. That's fair. No argument. We did have a rather unusual, as you may note, bond market a few years ago. It was like, I think, among the worst ever. But this guy's solution.
No, the worst ever. It was the worst ever.
Or call us and tell us which one was worse. This guy's solution is just absolutely horrible. I mean, okay, setting your risk budget. Okay, that kind of, like figuring out how much risk you want to take. I could kind of buy that. But then how do you do that? Well, you add bonds beyond treasuries and investment grade. Really? Is that going to make better? Is that going to make your bond portfolio better? My guess is it'll make it more bumpy, more up and down if you start to add alternative and actively managed fixed income.
Well, let's use one of his ETFs as an example.
Oh, let's try
Shall
that,
we?
huh? Yeah.
I mean, he is the portfolio manager of two funds, RISR.
Yep.
Which is, what is RISR?
It's some weird, strange.
Because I only look.
It only has 94 bonds in it.
It's the Folio Beyond Alternative Income.
Yeah. It has a 30% a year turnover. It's 95% in some sort of securitized notes. So yes, he is eating what he suggests. And it's not treasuries, that's for sure.
And his fee structure?
I told you 1.23.
And the other one, the one FIFR,
look at that one. No,
which is the Folio Beyond Enhanced Fixed Income Premium ETF, 1.07.
Yeah, well, you got 20% off. You take that one. There you go.
So, and by the way, 36% of the FIXP portfolio is in, 50% is in junk.
Yeah, this is really seriously bad advice. And again, I hate Barron's for it, but I know where they are. They're at the end of the line.
Yeah,
they got to do something or it's over.
No, they're not at the end of the line. That's not true with
know.
Barron's. Barron's is owned by the Wall Street Journal.
Okay.
Barron's is owned by Dow Jones. So they don't have to do this. But here's the
US
thing.
News owned by at the end? I don't know.
Nobody. It was just kind of there. I was like,
okay.
Did they forget to turn the lights off? Oh, but here's the problem with this one that's written by Dean Smith, the manager of these funds, that basically he's flogging in the piece. Nowhere in this article does it say this is a paid article. And I found that to be the case with the Kiplinger's articles, too.
That's shameful.
There's some I did some checking on some of these, and there are some backdoor deals being done that aren't direct compensation. They're sort of an indirect compensation, and therefore they're skirting the rules. But again, what does this point up for investors? You can't trust anybody.
And let's just finish the bond thought. You should be safe in your bonds. Your maturity should be short and intermediate term, and you should not be taking risks to try to make more there. That's where the problems generally start.
Simple is better. Simpler is betterer.
Tom and Don are talking real money.
Do you suffer from financial flinch reflex? Hi, I'm Don McDonald, and financial flinch reflex, or FFR, is a widespread condition triggered by watching too much financial news and not having a solid retirement plan. Common symptoms include doom scrolling, yelling at your portfolio, and considering gold bars, crypto, or your brother-in-law's startup. Markets don't cause panic. Not having a plan for them does. The best treatment? A real financial plan. One that's based on your life, not the latest headlines. And yes, we're talking to you, future retiree. Start your financial calming regimen today with a free, no-pressure meeting with an Appella advisor at TalkingRealMoney.com or call 800-386-3004. That's TalkingRealMoney.com, because a plan is the antidote to panic. Side effects of planning may include peace of mind, smarter investing, and fewer late-night CNBC binges. Please plan responsibly. Appella is an SEC-registered investment advisor. See AppellaWealth.com or the firm's Form ADV for more details.
Your guides to a really great financial future. Tom and Don are talking real money.
Oh, I forgot to mention the other thing about that article in Barron's article, in quotes, that really bothered me was that it was the bond fund he used for his comparison. He said let me pull it up right here.
I can't remember which one it was.
Yeah,
I used BND just because that's a
he
total
used
bond.
the iShares 20-plus year
that's
Treasury
right.
bond ETF.
Which really got
Long-term
hammered.
bonds,
really
which
got beat
did
up.
lose about 50% of its value over 5 years.
Another reason we tell you keep your maturity short and intermediate.
Right. But instead of using a total market bond fund, which would have been a much more fair comparison, and he should have used BND, because BND's after dividends, after interest loss over 5 years was about 5%, not 50%.
No, I think that.
So there's lies, damned lies, and statistics.
Exactly.
And the other problem is, and this is, we're going to get to phones in a minute, but this just came up. A friend of ours, an older gentleman, saw something on Facebook, an ad, and it was for Starlink at $127 for life.
Okay, check the box. That's easy.
$127 for life. He put up on Facebook, he goes, is this a good deal? Because I'm paying like $100 a month for my internet, so if I can get it for $127 forever, is that a good deal? I did a little checking. I went, yeah, that's a scam. That's a total scam ad. Yeah. He writes back, how is that allowed to happen? How can people use Starlink's name and not be in trouble? And that's the question we have for all of this.
Exactly.
You can't rely on somebody to protect you. Nobody's going to do it. Get it through your head. Nobody's going to protect you but you.
And by the way, it was not hard to do the research on the gentleman that wrote this piece, to look into his funds and all that. So a little work there could have saved people a lot of money.
Most people don't know how to do that work.
I know.
Which is why we're here, and we're willing to do it for you.
Absolutely.
Just call us at 855-935-TALK on Saturdays.
Oh, and we've been getting a lot of reviews real quick, and one woman just wrote and said, "Thank you, Don and Tom, for working every Saturday." Because somebody else had written something negative. She said, "No, thank you for working every Saturday."
See,
nice.
Some people are nice and not crooks. Some.
It's true.
All right, let's go to Colorado. I love Colorado. I want to live in Colorado again. Rob, welcome to Talking Real Money.
Good afternoon, guys. Appreciate you being on the radio and also your podcast as well.
Thanks.
So you might find this observation somewhat interesting. I listened to, Don, your podcast with CAF or Chat GPT.
Yeah, my buddy CAF.
Back to back to Tom and Roxy's Q&A.
Yeah.
Yes. And I could have sworn that the voice of CAF was Roxy's voice. The inflections, the tone, it was amazing. Anyway, it's just an observation.
Well, it's funny because the voice is modeled after a millennial voice.
Yeah, it is, yeah.
with even
she is a millennial
even
voice.
the up talking. There's a little bit of up talking. It doesn't have vocal fry, but there's some up talking and there's some, the likes and the pauses and things. It's incredible what they've done with the human voice in such a short period of time. It's scary.
So we may not be working very many more Saturdays.
Thank God we're almost done with our lives because
so close we can see the end.
Anyway.
Well, Roxy has a beautiful voice.
Yes, Roxy's
and
great.
you guys do too.
Oh, thank you.
So I got two statements to make. You make me think, and so I've got a couple of statements, and tell me where I'm right or wrong. I have a traditional IRA and a Roth IRA. They're almost of equal, sort of equal value. They're similar in size. So when I rebalance, I actually deduct or transpose the traditional IRA to an after-tax value and rebalance it against the Roth using after-tax values. Does that make sense to you?
Yeah. Sure.
It makes apples to apples, yeah.
Okay.
Makes it fair. Yeah, I agree.
But because if otherwise you get skewed. You think you're doing 20% when you're really not, because it's play money. It's federal tax money.
Right. It's money that's going to go away eventually.
Yes.
Yeah. No, I think that's
Not
reasonable.
yours.
I think that's reasonable.
As you guys say.
Yeah.
The other thing is you talk about diversification, and I like the one fund solution. Occasionally you talk about. So when I rebalanced lately, I actually used VT, AVGE, and DFAW, and I put like 20% in each one of them. And I know it's an overlap, but so what? I mean, it's easy to rebalance. And I looked at the the overlap, how much overlap there is between them. But I just felt like that, and I used obviously the RBO and ABDV for a small amount of that. And that.
Wait,
so
give me the funds again.
The
The three you mentioned at the beginning there. I kind of got lost.
Well, he uses VT, AVGE,
yeah.
and DFAW.
All three of them?
He uses all three. He knows there's overlap, but he said
I
it makes
see.
his rebalancing a little easier.
That's true. Okay, and there's some small differences, I'm sure, in performance that would allow that. Yeah.
Well, they're also VT has a different U.S. international than the other two.
Yeah, it does.
Sure.
Yeah,
it does,
So-
and it's got a
and then I
whole
used
lot
the
more
VTR and
U.S.
EV.
large cap value. I mean, U.S. large cap, not value. U.S. large cap growth.
Yes.
Yeah.
Yeah.
So
So
that's fine.
that's no arguments with that necessarily from your.
If it's
standpoint.
not too complicated for you, then
That's
it's
the
not a
thing.
bad thing. It's only when it gets too
Hey,
complicated for the person that it shouldn't be done.
Yeah. So, and the reason why that's it's not complicated because what I was doing was the 9 or 10 fund Paul Merriman, and it was just crazy. I just could not handle it anymore. So I said I want to simplify it.
It made
get
me
down
dizzy.
to 4 or 5 funds.
I
That
do
wasn't
this
as
for a
good as the
living,
one
and it
you had
made
on-
me
Yeah.
dizzy.
You had the one on the podcast yesterday when you accused them of being, what are you using, the fund of the month or something? Remember they had like 12 funds for a $5,000 portfolio. That's just nuts. Yeah. I kind of like what you said there, Rob, because that will give you a little bit of diversification among strategies, right? Performance, so you could rebuy. I think that's a very reasoned strategy. Sure.
All right. Thank you. I appreciate your time today. Have a great day.
Thanks for the call. We really appreciate it. 855-935-TALK. That's our phone number, 855-935-8255. You can call every Saturday. You can also send your questions in at talkingrealmoney.com. It's so easy to do. You just go to talkingrealmoney.com, which is the website. So if you don't get your call in on Saturday, you go to the website, you type in your question, and it'll go to Tom, or you speak it, and it'll come to me. One way or the other, or you get your question in. And we try to answer all of those. We really, really diligently
I will be
try.
honest, we're at a backlog of the
Okay,
typed
well,
ones. 'Cause
I am. Kath and I are recording another episode because you skipped out on recording with me this week because
Yes,
of your
I did.
vacation. So you can send me a few of those. And I'll have Kath
good.
read them to me because she sounds
Perfect.
like Roxy.
There you go.
Okay.
I will do that for you.
So,
sure.
yeah, then
Absolutely.
we get two voices, even though one of them is AI. She sounds pretty real.
Yeah, she does.
She
it's scary.
sounds
as you said.
shockingly real. And I got to tell you, they just upgraded from GPT 4.0 to 5, and man, she got smarter. As if she wasn't smart enough already.
She hadn't taken over the weapons or anything yet, right?
Not yet. We were talking about that. I'm really concerned particularly after watching Foundation. I'm really concerned that we need something better than the 3 laws of robotics that Isaac Asimov wrote about. We got to come up with something because it's getting scary. We'll be back. 855-9355.
Tom and Don are talking real money. For your real life and real future, Tom and Don are talking real money.
Again, our phone number always Saturdays, 855-935-8255. Call now. We've got lines open for you. And let's see. We've got Bob. Oh, my goodness. We've got multiple people. How did that happen?
Let's go to Bob.
Turns
We're
out.
going to Bob or Rob?
Bob with a B.
Bob with a B. Okay, Bob in Edmonds. Bob, welcome to Talking Real Money.
Gentlemen, how you doing today?
Good, thank you. Thanks for calling.
Thanks for taking my call. I got a question. First, thanks for unmessing up our portfolio. We started out, usual American funds like,
Yep,
like
everybody
a lot
else,
of people.
like that other guy on the
the way it
radio.
goes.
Yeah.
Yeah.
But we've only got two funds or two things left to get rid of, and one of them is Investment Company of America from American Funds, and the other is Microsoft, and both of them we've had for 25 years or so, and we got like 450,000 of each. Which one do we whittle down first?
Wow, that is a great. What's the cost basis on the two of them? What are you going to pay in taxes?
Let's see. The cost basis on the Microsoft is like $35-40. So we can't sell a lot, and because we get capital gains on the ICA, the cost basis is a whole lot higher.
Yeah, the ICA is going to have a smaller tax hit.
Yeah. And how close to how old are you? How close to retirement are you?
Retired now.
Okay.
We're both 69 and facing RMDs, of course, in a few years.
Yeah, I mean, then I would. Wow, that's hard to say. Just no easy answer there. I mean, because you want to start to clean those things up. Although they could say at least you could be honest and say it's riskier holding Microsoft stock than it would be the investment.
That's
fund.
what I was going to go on.
Yeah,
I was going to go
You're gonna
on
pay a lot
both
more
that
tax.
and because there have been capital gains distributions from American funds because it's a managed fund. The tax hit should be less dramatic. So I probably I got to tell you, I'd let the American funds roll. I really would. I'd let it ride. Their expense ratio isn't that horrible at 56 basis points. I mean, it's not great, but it's not horrible. It's fair. But you're way, 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 way overweighted in one stock.
Are you charitably inclined?
We're not to that point right now. We've got some things that we're thinking about.
I mean, is this money you're going to need in the next 10 years?
Probably not.
Short of making
Giving
gifts
away
to
shares,
charity.
yeah.
The only thing you really can do is sit down with, and I would sit down with an accountant or an advisor, a fiduciary advisor, and do a tax selling plan. Because what you want to do is avoid that creep to a killer bracket.
You don't want to go up.
You want to sell a little here, a little there over the course of years to avoid that. Now there's also
my wife is a financial whiz, and she's keeping us away from IRMA and in the next tax bracket.
Then you've got your brilliance right there. There is also one other little weird thing that I ran into the other day, and I had never heard of this before. Do you have a relative who's really, really old?
No.
Oh, darn.
Okay. Because that was a good strategy.
There's actually a sneaky little strategy I read about where you gift an asset like this, an appreciated asset, to someone who's older in their 80s or 90s. You gift it to them with the understanding that they're going to leave it to you in their will.
And then they pass away, and you get it at the
and
stepped
then
up
you
basis.
get it at the stepped up basis.
Yeah, that is tricky, but that's kind of like the backdoor
It's
Roth.
legal.
It's just one of those weird things. Yeah, right.
So.
Maybe you could adopt somebody. I don't know, because there's old people that need friends.
My mom's 89.
Are you asking, Tom?
I'm not that
He's
old.
not old enough yet. Darn it.
Not there.
Yeah.
Well, that's good. Now,
anyway, that's it.
I guess I would use all the available room I have between the bracket up to the top of the bracket you're in now, and start with the Microsoft stock. That's probably where I'd go.
And I'd let the American Funds Investment Company of America ride along for a while. Thank you for joining us, Rob, and we have more folks on the line at 855-935-TALK.
Tom and Don are talking real money. Reality radio for a really great future. We're talking real money.
Got yourself a money question? Well, we hopefully have your money answers. You're on Talking Real Money. That's the name. 855-935-TALK is our phone number. 855-935-8255. And the summer is probably the only good time of year to go to the beach in Washington.
That's probably true. Yeah.
So let's go to Ocean Shores.
Oh, beautiful this time of year. Sure.
Tony, welcome to Talking Real Money.
Hello. Can you hear me?
Can indeed. Thanks for calling.
You bet. For first-time caller, long-time listener, I'm 69, and I was planning to put in for Social Security at age 70, but I got a letter saying that something has changed and it won't matter or do you any good. Can you talk about that, or do you know anything about that?
Nothing's changed.
Nothing's changed. I don't know who wrote you the
there
letter.
was a letter. It was weird saying that.
I didn't see it.
Yeah, Social Security Administration sent something out saying that that our trust fund is running low faster than we thought.
Yes, that's true. Yes.
So that was it, but it didn't say. I read the letter. It didn't say things changed per se.
Yeah.
So
how close to 70 are you?
Yeah. How close to 70 are you?
No, a little after the first week of November. I'm real close.
Then, dude, wait.
Get your money. Oh, I was going to say, go ahead and get your money.
No, because it's so close. Yeah, you're right. It's
Yeah,
going to be like $50 difference.
It's not going to
something.
change the world, no.
Yeah.
If you were really nervous. This came up, by the way, in a conversation yesterday, and Tony, thank you, but yeah, do whatever your plan called for. This came up in a conversation yesterday, again, because I'm still hearing it that, well, the trust fund's running out, so I want to get my money now. I'm still hearing that from people. And that is not a good reason to take your Social Security. I've still only found two reasons that I like. Number one, you need the money. Okay, if you need the money, then I guess you got to take it. Number two, your health is of such a manner that you don't expect to live for another, just say 10 years. Like, or I have my family, nobody lives till 75 or 80, then sure, you could go ahead and take it then. But otherwise, it would have nothing to do with the current situation of the trust fund, which, yes, is being spent down faster than we thought. I do expect, I think Don can back me up, I do expect a solution to that at some point, but probably the day before the trust fund starts coming. Or a week before or something like that, because that's just how things operate. So, but I would not take it as a result of that. So, and people kind of look at me cross-eyed when I say that. And they're like, oh, what do you mean? I got to get my money now. Well, no, that's bad rationale.
And by the way, if you filed now, you're not going to get your first check probably till October.
Although you did it, you had it like a week later or something.
No, it took a month. Took like a month.
Well, that's okay, but it's still
it fell right.
I think they knew it was you, and they're like, we don't want him going on the air saying it took forever to get my money. So
probably.
Send
sure, I have
right
that.
now.
I have that kind of power.
Oh, huge clout. So Tony,
but
whatever your plan said, do it, but don't do it because of whatever's going on.
I'm 69, and I looked at the difference between 69 and 70.
And you just said, give him my money.
Went,
I get that. Yeah.
And the thing is that I've been investing it. So.
Okay, please, let's not go there because people say that all the time. I'll just take it early and invest it. I know, but people think that's a good rationale for taking it too.
No. But I got it coming in. That way, if 1 month I go, you know what? We're going to fly first class somewhere.
There you go.
Instead of Comfort Plus, which is all I do now.
Always available here.
Plus.
Would love to see you. So
right.
get your you-know-what out here.
All right, see ya. We'll be right back.
Tom and Don are talking real money.
Do you suffer from financial flinch reflex? Hi, I'm Don McDonald, and financial flinch reflex, or FFR, is a widespread condition triggered by watching too much financial news and not having a solid retirement plan. Common symptoms include doom scrolling, yelling at your portfolio, and considering gold bars, crypto, or your brother-in-law's startup. Markets don't cause panic. Not having a plan for them does. The best treatment? A real financial plan. One that's based on your life, not the latest headlines. And yes, we're talking to you, future retiree. Start your financial calming regimen today with a free, no-pressure meeting with an Appella advisor at TalkingRealMoney.com or call 800-386-3004. That's TalkingRealMoney.com, because a plan is the antidote to panic. Side effects of planning may include peace of mind, smarter investing, and fewer late-night CNBC binges. Please plan responsibly. Appella is an SEC-registered investment advisor. See AppellaWealth.com or the firm's Form ADV for more details.
Your guides to a really great financial future. Tom and Don are talking real money.
All right, our phone number, 855-935-TALK, 855-935-8255. And Bruce in Sammamish, welcome to the programish. Hey, Bruce.
Hi, guys. Hey, thanks for taking my call. My question is about Bitcoin, and I guess ultimately, or any cryptocurrency really. Ultimately, my question is, do you guys believe that it should be part of a well-diversified portfolio? And, underlying my question is I keep, a lot of people I think have invested in it and, it's gone up a lot, but I hear about people investing in it, but I never hear about people actually using it for anything. And maybe that's just my blind spot and I'm not aware of it, but
okay, well, let me ask you a question, Bruce. This is good. Where are you on tulip bulbs, beanie babies, those kind of things as an investment?
Not high on them.
Let me give you the Don answer. If it cannot become more valuable by itself without the greater fool coming in and buying it down the road, if it cannot make itself more valuable, then it's not an investment, it's a speculation.
It's simply a matter of what the next person says it's worth. There's no earnings, there's no dividends, there's no interest, there's none of those things that make it.
It's impossible to evaluate its worth.
Exactly.
Because it doesn't have any intrinsic worth. Now you can, or at least next year, you'll be able to use it if you have an app through Square. So you will be able to use it at a few million shops. But again, does that give it value? I don't believe that it does. And the reason I have a problem with it as a currency, and this is a totally different, this is not about whether you use it or not. It is hardly used today as a currency, though. But I like my currency to be worth the same price or pretty darn close to it day to day. For example, if you take the U.S. dollar relative to the euro or the British pound or the Canadian dollar or the Australian dollar, its value day to day is within 1% or 2%. Probably less than that. That's at the high end if you get 1% of
quite different with
change.
Bitcoin, where it goes all over the place. Yeah,
Bitcoin is up $188 a Bitcoin today.
Today, what we call traditional trading day.
If I was to go in to buy a car, and it was $50,000, and I'm not going to go get it for a couple of weeks, and the value of Bitcoin declines dramatically between now and then, and they're going to tell me, well, now it's $75,000 because the Bitcoin isn't worth as much. Well, that's not a very good currency, is it?
Yeah, and back to your question. The answer, of course, is no. We do not use this in our portfolios. We do not recommend it to others. And we would place it in one of those alternatives that we just think you should basically ignore.
We don't have gold in our portfolios.
Got it.
We own companies that
Hey,
you know,
and we
mine
own
gold
companies, by the way, that own Bitcoin.
Yep, that we do. You can't avoid it, really. So it's in there somewhere. But
we don't
go out
suggest
of our way
that
to own it.
anyone, and I can go into a store and actually pick up a piece of gold. Costco sells them all the time.
Yeah, they do. Yeah.
I can pick it up and I can hold it in my hand. It doesn't get any bigger, but at least I can hold it in my hand. I mean, with a Bitcoin, it doesn't get any bigger, and I can't hold it in my hand.
Someone picked up my briefcase. This is really heavy. I said, I keep the Bitcoin in there,
Sorry,
so you can understand that's really
Yeah,
heavy.
we don't
What?
suggest
No,
it.
never mind. No, not a good idea.
Okay.
Does that help? I hope. All right. 855-935-TALK is the phone number. I'm going to get another call from Bob.
It's coming. You know it is.
I know it's coming.
I'm surprised he didn't call us over the
No, he doesn't.
the use by.
He doesn't actually
by
call.
Square.
He speaks
I know. He
into
puts
the
pieces
thing on
in
talkingrealmoney.com.
Yeah, right. Yeah. But I'm surprised you haven't heard from him after that acceptance.
I
'cause
might
that was a
have.
big
I just
deal.
don't. I throw them away now.
You don't even open them.
I just know. I just trash them. I don't even listen because it's the same
Sorry,
old
Bob.
argument. Well, Don, you're wrong again. Yeah, okay.
Yeah.
I know that you think I'm wrong, and someday we're going to find out which one of us is right.
You may not be here. For
I
that
may
day,
look
but
like a
okay.
total idiot someday. I might. It's a chance I'm willing to take to help people avoid what I consider to be a truly speculative asset.
I will also say this. I think the potential for a massive meltdown in something like that, where it's just air that's filled this up, is off the charts. It could go down really supremely fast. So that's something I'd be worried about as well.
let's take Bitcoin and set it aside. Okay? Let's set it aside. Let's just say, okay, I'm not giving you this, but hypothetically, let's say I'm giving you that Bitcoin might be the winner. Of what possible use are the other 25,000 cryptocurrencies?
Well, one's a joke. I can make a joke.
No more than one's a joke.
I thought it was one that they specifically said was a joke.
Well, they did.
Now.
I mean, that's Dogecoin.
And then that's right. And then Doge took on a different name, different brand too. Is it 25,000? Wow.
There are, let's see, I'm just looking for joke
to a certain
coins.
South American drug
there-
dealer also have one or something?
There are like
Or-
2,000, quote, meme coins that are just sort of made
Okay.
up.
Yeah, right. Just talking real money,
The
whatever.
talking real money coin. Yeah. Yeah.
right.
Yeah. If we brought that out, it would be a joke.
Yeah, it would be.
And-
But we'd
and-
be rich probably.
And if you bought it, you would be fools.
Yes, that would be dumb.
Kind of like those of you who own Dogecoin.
Yeah.
I'm sorry.
It's
but
a
you
total
you
$1 trillion
are.
market, right? How much is in those ones that are just so tiny they don't even matter? It's a small
Let's
number,
see.
isn't it?
How much?
It's
Let's see.
and this, by the way, is going to come to a head more because of the executive order signed this week by the president. It's going to allow alternative investments into employer-sponsored plans.
Actually, it's a pretty big chunk of money. There's
How much
about
now?
$4 trillion total in cryptocurrency.
Okay, I didn't know it was that big. I didn't know
$4
it was
trillion
that big.
in cryptos.
Okay.
Bitcoin is 2.33 trillion. So
it's almost half that's in these other ones. You can almost say
1.7, those are in altcoins, Ethereum, Solana,
40%, yeah.
XRP, meme coins,
Wow.
all of those
I
things.
think-
That's over almost $2 trillion in other
My take on
cryptos.
those-
Why do we
my
need
take-
all those?
My take on those is you go to a bridge. There's a bridge between here and my home. You can just take your money and pour it right off that bridge. It's get the same effect. That's nuts.
How much? I'm going to see how much of that's Ethereum, because Ethereum is one of the bigger ones that
Yeah, that's got to be.
can't find the market cap. Should be here somewhere. Oh, okay. Ethereum is pretty big. It's half
How
a
big?
trillion. Half a trillion.
All right.
So Ethereum
500
and
billion.
Bitcoin
Make up about half of the market.
over half of the market.
Over half, yeah. There you go. So that doesn't make it something we would recommend or suggest you put in your portfolio.
And
No.
I'm sorry, but call us fools, but you can, and you do. But I see no chance that we will ever recommend cryptocurrency as part of a portfolio. Don't see it ever happen.
Tom and Don are talking real money. For your real life and real future, Tom and Don are talking real money.
And again, there's another way to get in touch with us. If you don't get through on Saturdays at 855-935-TALK, go to talkingrealmoney.com, click on the Contact Us button there in the upper right corner, and then either speak your question or type it like, well, here's one right here.
Yeah, Charlie writes us from Seal Beach. I got to ask, would you go to a beach that has a lot of seals on it? It doesn't sound very appealing to me. They're big, they're gross, they belch.
Yeah,
No?
I would probably go there to see the seals.
Okay.
Yeah.
All right. Yeah. It says, hello, Tom and Don. Here's a dad joke for Tom.
Oh, jeez.
A panic-stricken man explained to his doctor, you have to help me. I think I'm shrinking. Now, settle down, the doctor calmly told him. You'll just have to learn to be a little patient. Shrinking, little patient. I think that's funny. All right, here's the question.
I got it. I got it.
Here's the question. It's those hosts that laugh at their own jokes. That wasn't my joke. Here's the question. It's my understanding that BND, the Vanguard Total Bond Market Index Fund, has some 30-year bonds in the mix.
Yes.
If I just wanted to do a mix of BIV, the Vanguard Intermediate Term Bond Index, and BSV, the Vanguard Short Term Bond Index,
yes.
What percentages would you recommend
50-50.
instead of using the BND? No, I'd probably go two-thirds in the intermediate.
Yeah, I go
short.
Intermediate for longer income stream. Yeah.
I'd wonder what the difference would be. I mean, yeah, you got a little bit of longer exposure in BND, but it's not a lot.
Yeah, I want to look at that. I'm going to
safe,
look at what the maturities
I bet it's going to be pretty light, but that's a fair question. And a really great joke, Charlie, of which I expect to use many times in the weeks and months ahead. So I thank you for that, of course.
I'm not seeing any 30 years in there. I'm seeing the longest maturity is 20.
It says some 30-year bonds in it.
Yeah, I don't see any 30s in it. I do not. And everything is investment grade. So, again, the reason for it, one of the reasons for it is the protection it gives you when rates are falling.
There you go.
If you have those longer maturities in the portfolio, remember the average, the duration here is less than 6 years. And the maturity, the maturity of it is about 8 across the portfolio. The effective duration is shorter because they have more of the shorter stuff. That gives you a relatively stable income stream when we have a period of falling rates. Yeah, it does cause it to go down a little bit more, but remember, BND didn't go down horribly during the bond crunch because it had so much.
Hasn't made you much money in 5 years.
Hasn't made you any money. It's lost your money over 5.
5, yeah. 5 years, long time.
Lost 5% over 5 years.
Yeah.
It's made about a total of about 17 or so % over 10 years.
Total return. Including interest, et cetera.
So it has been a bad period for bonds across the board. Yeah. But basically all of that was 2022 when they had a 13% hit in 2022.
Yeah, again, it wouldn't be a reason that I wouldn't own any bonds, and it wouldn't be a reason I'd go own riskier bonds. I wouldn't start monkeying around with something that has worked over the long haul. And certainly if you're drawing on the money, you're going to want to have something in bonds because that's going to has given you more stability in the long haul.
Yeah.
Yes.
So, thanks for the question. Thank you all for your questions. If you want to ask us some, go to talkingrealmoney.com. If you want help from one of our advisors, we'll give it to you for free with no obligation. No high-pressure sales pitch. Promise. Just go to talkingrealmoney.com, click on the button that says Meet an Advisor.
The opinions and views expressed on this podcast were current on the date recorded.
Opinions, estimates, forecasts, and statements of financial market trends that are based on current market conditions constitute our judgment and are subject to change without notice, including any forward-looking estimates or statements which are based on certain expectations and assumptions. Although information and opinions given have been obtained from or based on sources believed to be reliable, no warranty or representation is made as to their correctness, completeness, or accuracy. Information presented on the podcast is not personalized investment advice from Appella Wealth. The views and strategies described may not be suitable for everyone.
This podcast does not identify all the risks, direct or indirect, or other considerations which might be material to you when entering any financial transaction.
Past performance does not guarantee future results, and profitable results cannot be guaranteed. We hope you realize that the information provided on Talking Real Money is for informational, educational, and hopefully enjoyable purposes only. The podcast is not trying to get you to buy or sell any financial products or securities. Instead, the program is provided as a public service by Apella Wealth, a fee-only registered investment advisor. Please see Apella Wealth's ADV Part 2A on our website for information regarding Apella's fees and services. Apella Capital, LLC, DBA Apella Wealth, is an investment advisory firm registered with the Securities and Exchange Commission. The firm only transacts business in the states where it is properly registered or excluded or exempt from registration requirements. Registration with the SEC or any state securities authority does not imply a certain level of skill or training. Apella does not provide tax or legal advice, and nothing either stated or implied here should be inferred as providing such advice. Thanks for listening, and please visit TalkingRealMoney.com for more information and important disclosure related to performance of any specific index or fund quoted in this podcast. And the lawyers get richer.